Thank you for sharing your insights. Okay, I think everyone is still warming up. I expected a couple of questions just now, but everyone is like a bit shy to share. Yeah, but yeah, it's fine. All good. Yeah, so we're just waiting for all our panelists to arrive. Actually, almost all of them are here already. So yeah, there'll be a networking session after the Ask Me Anything fireside chat. So do stick around until the end of the session, and then you can go to any of our panelists. You can go to Fook Wan if you want to know more about what he was talking about, candlestick patterns, yeah, etc. So yeah. Okay, I'll be right back. All right, since we're starting soon, I would like to invite all our panelists to take their seats. I'll be introducing them shortly. Yeah.
Testing 1, 2, 3. Testing. Yeah. All right. Hi. Hello. Hi.
All right.
Okay. Hi.
All right. Hello, everyone. A very good evening to all here at CGS CIMB's co-working space, as well as those joining us online. Welcome to the first Ask Me Anything fireside chat session as part of our 2022 National Investment Challenge. My name is Josephine, and I will be your MC this evening. Most of you here are participants of our investment challenge, co-organized with Republic Poly and Prosperous. Any Republic Poly students here? Woo! Cool. All right. So the challenge under CGS-CIMB's National Financial Literacy Program is an initiative for youths to nurture and empower tertiary level students with lifelong skills in managing their personal finances and investments. All right. So we will be taking live questions from the ground this evening. You may scan the QR code shown on screen to submit questions via Pigeonhole as well. And the password would be CGS-CIMB. CGS-CIMB. Okay, so we have over 1,700 participants actually across Singapore's 10 institutes of higher learning for our investment challenge. And this contest will see teams compete to win from a total prize pool of $34,000. So to all of you here, I wish you all the best. I cannot participate in this contest, sadly, but yeah. All right, without further ado, allow me to introduce to you our panelists and moderators this evening. So our first panelist this evening is Ms. Carol Fong, Group Chief Executive Officer and Singapore CEO of CGS-CIMB Securities. Carol is responsible for the overall management and financial performance of the group. Her experience in the market spanned 40 years, and she's also an independent director of two companies, Genting Singapore and City Developments Limited. In 2016, she was conferred the IBF Distinguished Fellow Award for her achievements in the financial industry. For our second panelist, we have Mr. Shenison Lin, CEO of Investing Note. Shenison is the founder of Singapore and Malaysia's largest and most interactive stock investing community platform. A chartered market technician, Shenison served as the technical lead for Share Investors' technology team prior to Investing Note. He led the team to develop large-scale financial portals, which included the Bursa Malaysia's main website. Our third panelist is Mr. Timothy Phillips, Head of Content at Prosperous. Timothy has over 10 years of investment and content experience with the likes of Schroders, The Motley Fool, and CGS-CIMB Securities, covering everything from US stocks to Asian equities. He is a certified trainer for the SGX Academy and a passionate advocate for educating investors on the benefits of long-term investing. And finally, we have Mr. Chua Wei Ren, a senior associate with our research team. Ren is a market strategist who specializes in technical analysis and macroeconomics. He has over 12 years of experience examining price movements and currently writes for Trend Spotter, our daily market outlook that identifies trading ideas in Asia's equity markets. A seasoned presenter, he has been featured in the Business Times and Capital 95.8. Phew, that was quite an intro. For this evening, moderating the Ask Me Anything Fireside session is my colleague, Ms. Mabel Ng, and a third-year business student from Republic Poly, Mr. Samuel Lin. And they are seated here right in front. So before they chair the Fireside chat, I would like to invite our group CEO, Ms. Carol Fong, to say a few words to open the session. Over to you, Ms. Carol.
Yeah, hi everyone. Great to see such a big turnout. I've got the thing on there. Can you guys hear me from the back? Yeah, okay. For those at the back with the no seats, actually some bench seats here. I would like to just come up and sit there because it's going to last quite a bit. So, testing, 1, 2, 3. Testing, yeah. Okay, so I think I don't know whether all of you attended yesterday's session. I see some faces that I kind of remember because you guys came and talked to me. And I think today's session will be a lot more interactive, and it's really ask me anything. Nothing is off the cards, and we will answer every single question that you have. Okay. So with that, I'll leave it down to the moderators to start the session.
All right. Thank you very much, Carol. I believe we're all ready for the Fireside Chat session. So without delay, take it away, Mabel and Samuel.
Thank you, Josephine. Hi, everyone. Once again, I'm Samuel, and this is Mabel, my co-host. And we are your moderators for today's Fireside speech. Together with us, we have our professionals, Carol, Shanison, Timothy, and Wayron with us here today.
Thanks for the introduction, Sam. So, Sam, let me kick off with this question. Do you think it's getting more expensive to live in Singapore?
Yeah, I agree. Have you seen the recent chicken price increase in the hawker centers? It's crazy.
Yes, that's so true. With inflation and the GST hikes from 8 to 9%, if you've got anything you want to buy, it's best to buy it this year, because everything is getting so much more expensive.
Thank you. This brings us to today's Financial Literacy Ask Me Anything Fireside Chat. Financial literacy consists of many elements such as saving, debts, and budgeting. Today, we'll be scoping into investments and trading with our experts here today.
A gentle reminder, if any of the audience here have any questions, you can scan the QR code that's on the screen. Can we flash it? Yeah, give us a moment if we could flash the QR code. So basically, if you've got any questions in real time that you want to ask about anything relating investment, trading, or financial literacy, feel free to scan the QR code, this QR code on the screen, so input your questions in real time.
Thank you, Mabel. Let's kick off this fireside chat with our first question. Hi, Carol. One issue that's very close to our hearts is the rising cost of living in Singapore. Does financial literacy play a part in mitigating this change? If so, how?
Okay, rising cost of living. I think that we all know, we experience it every day. And obviously, I think that, for all of us, we need to know what does it mean in terms of when costs go up, what do we do? And I think that if you do not know basically how to handle increasing cost of living, then I think that it's right to start learning about it, right? So financial literacy can be many things, right? So for example, I always like to give this example, right? If you savings and investments, before you start investments, you must have some savings, right? But guess what? Rising cost of living. Look at Starbucks, for example. You guys go, how many of you, I'm sure all of you actually go and drink Starbucks, right? You don't, okay, very good. $5 that saved a year ago, now it's $7. That's almost equivalent to almost a 40% increase in cost. Now, if you times that, if you drink Starbucks every single day, you just calculate how much actually will you spend a month, $200. You times basically 12 months, it's $2,400. Now, if you had spent that money, if you use that money and bought Starbucks shares over the last 2 years, how much do you think you would have earned? Okay. The share price of Starbucks actually doubled. Okay, but now it came down, but over the last 2 years, it kind of doubled. So actually your $2,000 would have gone up to $4,000. So that's what it means that if you are financially literate and you learn about basically how then do you basically save versus spend versus invest. All right. So it's very important that that as you guys are quite young in your journey, But instead of buying Starbucks every day, my suggestion to all of you here is that maybe spend instead of buying Starbucks every single day, maybe you go to the kopitiam and buy it. It's $1.50 right now for coffee. So
Should
it's
be.
right. Okay, so then you save $4, right? The $4 you can actually buy Starbucks because you can buy fractionalized shares in US. So with a few dollars, actually you can buy Starbucks shares. So that's what I mean by that if you really want to be financially literate, these are little things that you can do just to help you along the way. Along with the way of answering it.
Yes, thank you, Carol. Hello, Shanison. As one of the founder of the most interactive stock investing community platforms, how do you think financial literacy can cushion the rising cost of living?
First of all, I would like to thank CGSCIMB for giving me this opportunity to come here. Thank you, Carol. Yeah, so coming back to the questions, right? I mean, in terms of financial literacies, when it comes to about this, right, people are always maybe thinking about, how do I, pick stocks? How do I invest in the markets? But I feel that it's actually more than that. It's about the mindset about the money also. Like Carol mentions, it's about, how do you balance between the spending powers and also the saving also. So you must have proper planning in terms of what you want to do with the monies, and it's actually very important. But good thing with Singapore is here, right? Although there's a rising cost in terms of that, right? If you guys attend yesterday events, right? The minister already said, if you cannot buy the flats in the central towns, you can come to Sembawang. The flat is selling about 300,000+ over there. So that's always a good choice over there in Singapore. So you need to have a better planning in terms of how much money you have and how much do you want to actually do for the investments? How much do you want to use to buy a house? So you must have, a proper planning for that and proper visibility in terms of cash flow in future. Otherwise, right, you might go into things like, you are overspending it, you are over leveraging it, borrowing too much money on that. So that is one of the points I would like to, share with you guys also.
Thank you, Shanison.
We talked about investing as well as how we have to mitigate the rising cost of living with financial literacy. So I'd like to ask Carol, if a student here wants to start investing with a monthly allowance of like about $500, how do you suggest they start with that? Or is $500 even sufficient funds?
Okay, put it this way. You guys also invest in crypto, I'm sure, right? How much what's the minimum amount of money you need to invest in crypto? Anyone know the answer? $2. I actually checked on Google two nights ago. It's $2 actually minimum you know. So actually, when you want to invest, it doesn't matter basically, what amount of money you have. You can buy $2 of crypto. My suggestion is that don't if you only have $2 to spend or $100 to spend, don't put everything in crypto. I talked to some of you yesterday as well, and I know that some people have lost money in crypto because some of you may not even know what you're buying because your friends told you to buy Luna, Terra, and you go in and buy and suddenly, everything goes belly up, right? So important thing is with risk management, right? You diversify your risk. You have $100, you make sure basically you buy 20, 20, 20, 20 or something. Or starting out with $500, $20, whatever it is, buy an ETF. And ETF is the most diversified instrument you can buy. If you buy, for example, an ETF on the S&P or the ETF basically on the Dow Jones, you buy over $200 number of stocks. Huh? So anything goes up and down, it will not fluctuate as much. But maybe some of you like the excitement of the fact that to the moon and it goes up 500% and 600%. But guess what? You're only looking one way up. Huh? At the same time, you go to the moon back to Earth. Huh? It's very, very painful, right? So and you've seen that when you fly from the moon downwards, it's always almost like crash landing. So my advice is diversify, start small, but start. Doesn't matter what you buy, just go and start.
Okay. Thank you very much, Carol. I think that gives them a very good idea of how to start, start small, diversify, and really be able to understand the expectations you have going into investing.
Hello, Tim. When it comes to investments, many students might get confused. What is the difference between investment and trading? Is there one which is significantly better than the other?
Well, I'm a bit biased because I'm a long-term investor. But I think some of the people on the panel disagree with me. But I think the importance of investing is that you're putting your money away and you're letting it grow, right? And as I guess Warren Buffett or Charlie Munger said, you're not interrupting that compounding process. So that to me is really investing. I think trading, in a sense, is a way to make money, and I think it's great. And there's, I think we have experts here who are really into charts and the technicals, and I think that's good. but it's something that you really have to love, right? So if you think about the percentage of the population in Singapore who are really into charting, who are really into technicals, it's probably going to be a very small percentage, right? But they're experts and they know their craft and they know their trade. And, you know, I have nothing against that. But I think for the majority of people in Singapore, like everyone invests, right? Whether you're, you know, working at a hawker center, whether you're a student, whether you're, you know, a CEO, everybody has to invest. You have to invest your CPF, you have to invest your savings. So I think for the majority, for 100% of people in Singapore, I think investing is, you know, the way to go in terms of putting your money to work. Trading is a way to take advantage of price arbitrage on certain stocks, on certain themes over the short term, maybe over, you know, a week, 2 weeks, a month, on momentum, on swings. You heard Juan, my colleague earlier, talk about resistance. And I think, you know, all those types of technical terms, that's great, but you have to have a passion for it. You have to really love that stuff. And if you love that stuff, that's great. And if you can make money from that, that's, you know, that's perfect. That's great. Whatever works for you. I think investing is very specific to your personality, to what you love. To me, I find the fundamentals really exciting. I find the business and how it grows really interesting. I find the geopolitics fascinating. I mean, I did history as a major at university. So I find the way that the world works and the way that it evolves really exciting. So to me, like looking at charts doesn't really get me that excited, but for other people it does. And I think that's great. But I think the overall point I'm trying to make is everyone needs to invest, but maybe only a small percentage of people will be trading.
Thank you, Tim. What about Weiren? Do you have any preference on whether you prefer? Do you think trading or investing is better than the other?
First of all, I think I'm the smallest percentage of team you mentioned on earlier on. So I'm a chartist. I've been doing it for 12 years. So I mean, personally, I do like trading because it's fast, and I tested my system in the past. So I mean, investing is really like buy and hold for long term, 10 years. Warren Buffett does that. So for trading wise, I think there's a lot of components you really need to account for. You need to take note. First of all, I think regardless of what strategy you have, risk management and money management is the most important one. And for me, why I like trading is because I tested my system. I mean, in and out. I think Shanison would know. Like we both take CMT, and we know the importance of doing signal testing and back testing, and put it out in the market. I think every month I like to see 2%. 2% compounding, and then 2%, let's say $100. Next month I got $120, $102, and then next month 102 times 2%, which I'm not going to calculate right now. So leave you all for the imagination. And after that is really all of the, all the profits, and it will really make my day. But I mean, one word of caution before we really go out and do your decide whether to trade or invest. First, you got to put your strategy to test. It means that doing with a simulation, doing with a demo account, that's the most important thing. If you go straight into the live market, and likely all the whales are going to eat you up.
And actually, I'm just going to comment on some of the remarks with my fellow colleagues here. It's not really binary. It's not about trading or investments. You can actually take a hybrid approach, right? A core and satellite. So you can't hear, is it? Hold on a minute. Not sure why. Tessie, can you hear? Can you hear now? Can you hear now? Yeah, okay, got it. So I think put high enough. So I was just saying that you don't really have to take a binary approach, investments or trading. For myself, for example, I always take a hybrid approach, right? So I do fundamental, and I also do trading as well. So whether you split 80% fundamental, 20% trading, 80% trading, 20% fundamental is very much your own preference, and also depends on timing of the market. So my suggestion is that don't think of just investments or trading as just a binary decision. You can actually make a mix and have a core and satellite.
Thank you for sharing that, Carol, as well as Tim and Weiren. I think the question now would be, as a beginner investor or trader or a mix of both, what would you suggest them to start with? If we can start with Weiren.
I think this question is you really need to ask yourself what do you like, what do you prefer. So it's not like, oh, I think my friends love trading. I think trading is going to be good. Then I go into trading. No, it's not going to work this way. You really got to ask yourself what you like. Like, I think most of you, like when you choose your course after your O levels, you really choose the passion, right? It's not like the parents say, go JC, is the best route for you. No, you go, no, you don't, right? So you really got to ask you got to close your eyes, ask yourself, what is the one that you really like? And then I already mentioned just now, I think back testing is the most important. You really need to put your strategy out in the test, and then also optimization, removing outliers of profits, all these technical terms. I'll leave it to the next time if I have the chance to share. All right, thank you.
Okay, if Tim would like to take the question as well.
Yeah, for me, that's easy. Buy an ETF, invest in an ETF. There are loads of people who won't be interested in investing to the level that we are and aren't super, geeking out on this kind of stuff, which is fine. I think that's great. And if you aren't, then you can just put it in an ETF and, that will do its work over time. I think if you do have an interest in businesses, in the way that they function and the way that they grow, then I think the next step after the ETF would be to, research individual stocks, get into understanding the business, what makes it tick over, cash flows, operating income, margins, all that kind of stuff, and then go in business terms, which you have to really love, again, to really get into, because stock picking is something over the long term, which is not easy, right? You see a lot of the fund managers in the US, people talk about ETFs outperforming however many percentage of funds, which is true in the US. So if you're thinking about specific markets, you have to really understand the market. You have to really understand the companies. You have to understand your risk profile. Again, what Weiren talked about is about risk management. Everyone is going to be different in how they think about risk. Some people will be okay if their stock drops 20 or 30%, and some people won't be, like they won't be able to sleep. And that's fine. So I think you just have to understand your own personal risk tolerance and how that fits in with investing and how that also fits into your broader financial goals, right? Because some people, I think Carol touched on, your targets and your, saving and investing and insurance. Everyone's characteristics are going to be different. Maybe some people will want to save, 50%. Some people will want to spend and enjoy their coffee a bit more, which I think is fine as well. But, I think it depends on you as an individual and your long-term financial goals, and then try and factor that into how you invest. But for me, it's easy because an ETF is the first step for anybody.
Thank you, Tim. Shanice, what do you think about it as a beginner trader investor for the students here? Anything in specific that they may be able to start with?
Yeah, I think at the beginning, right, if you are just started, the thing is you might hear a lot of us might say, you need to understand what is investing and trading. And it does actually is very, very important. But the thing is, if you don't start investing or you don't put your money into, into the markets, right, you have no idea what is investing and what is trading. And sometimes you might be thinking you are investing, but actually you're trading. Or sometimes you are trading, but in reality, actually you might be investing. So that's the thing, it's actually very hard to differentiate until you start to put your money in. Right. For me, actually, at the beginning when I first started trading, I mean, in the markets about more than 10 years ago. So when I first started, actually, I know that Warren Buffett is the famous guys out there, talking about if you want to start investing, always put money into a company that you are familiar with. So for me, right, when I first started, I was looking at all the markets over there, the counters available in the markets. Then I pick a stocks, but this company actually, is actually from my hometown. I was born in China. So it's actually from Fujian province over there. So it sells all the sports apparel, the shoes, all those kind of things. So that's a company actually I put into money in because I feel that this is a company I'm familiar with because since young, I see so many stores out there. But again, come to just now the Vijay mentioned about point. If you see all the stores there, right, that doesn't mean actually I'm making good money. So for me, I made a mistake over there. I thought, wow, this company I'm so familiar. Even the shoes I'm wearing is actually for them. Okay, not today's one, okay. So I bought into the company, but eventually, after about 1 year, the company was delisted, because it involved some frauds in terms of the company, So there's a company, based on the financial, it looks so great and all those, right? But I was not able to tell whether it's true or not based on the numbers. So for me, I'm not as expert as a team over here, who can actually tell whether it's right or wrong. So for me, I started thinking about, okay, maybe investing is not something actually I'm very good at, and it also requires a very patience, or strong patience. You need to wait for many, many years actually for it to come back. So for me, as someone who want to take a bit more risk over there, and I start to learn more about tradings in the markets. And that's where actually I start to trade more in the markets. So my point here is you need to put money into the markets for you to learn it, but probably you don't have to put so much into it until, lose everything you have saved, but start doing it. And as Carol mentioned, which I agree a lot also, it doesn't have to be either trading or investing over there. Even until now, after so long, I know that I'm not very good at picking individual stocks, but what I do is I have another portfolio which I invest into ETF, like Tim mentions, so into ETF, a few markets over there, then on another portfolio, which is a major one on me, I put money into tradings. I do a lot of tradings over there, trend following and systematic trading, all those kind of things. But whether in terms of your money, how much you percent you want to put into investing and how much you want to put into trading, it actually comes to the money management and risk management. And the kind of ratio between these two, it might change as your year grows, in terms of aging, So for me, it's when I grow older, so I tend to reduce a bit of risk, essentially because I have the family and all those, I don't want to have too much risk. So after that, I put in more money into the investing while the trading parts actually start to reduce a bit more over there. So that kind of things will actually fine tune along the way. It's not something actually start, and it's going to be there forever.
That's a very good sharing from our three panelists there. So I'm understanding that it's about understanding your personal preference, your risk appetite, having an idea of what money management, fund management, whether you want to go for the short run or the long run, as well as to diversify. Am I right? Yeah, so I hope that the students here are able to take that in as a very good beginner trader or investor.
Sorry, maybe I just want to add on a bit here, if you don't mind, Mabel. Can I just have a show of hands? Who has started investing in the market? Okay, so the majority have not invested, is that right? Okay, who is not invested? Be it crypto, stocks, whatever it is, who has not touched stock market at all? Okay, quite a fair bit. Okay. Now, this is an important question to ask because you may ask yourself, why do you even invest? Why can you spend all the money and enjoy life? Why do you invest? I'm going to give you an anecdotal evidence. I've shared this with some of my colleagues before. I'm mother of 3 children. When each of my child, when I gave birth to each of my child, I put money into the savings bank account. I had a bit of money, so I put $30,000 in with each of them. 30 years later, how much do you think that $30,000 worth? Savings account. Aaron or something, starting with A, I know. Alvin is there, see, not too bad. Okay. Over 30 years, 150,000. One more guess, please? 300K?
Assuming you don't get it compounded, 10K.
10K?
Inflation.
Okay, if 30,000 hard to go to 10K savings account, no risk. Value, okay. From 30,000, after 30 years, putting in a savings bank account, one of the local banks, I was shocked when I looked at the account and said $32,000. $32,000. This is risk-free, risk-free rate. So you just imagine inflation, you're right. Every year inflation goes up. So whatever you put in the money, you're losing money. You're effectively losing money. So imagine today, what's the inflation rate right now? 4%. The banks have moved up the interest rates from 0.2% to maybe 0.8%. Okay. Wow, precisely, right? You go in the bank, you put your money there, you're losing money every single day they're putting your money in the bank. Yeah, okay. So that's the reason why you're here today, because you're learning to invest. You invest because you do not want to lose money by putting money in the bank. Nothing wrong with that. You need to have, by the way, you do need some savings buffer, at least 6 months or so is a general rule of thumb that before you start investing. But you keep on putting money in the bank, 30 years later, you'd be like, stupid me lah. Okay, so I really regretted it because actually I forgot about it, right? Then your phone savings book, then I found out it's $32,000. Immediately withdrew everything out and put it into investments. So lesson learned here, guys, if you're really looking to basically grow your money, you put a certain money in the bank, you invest the rest. Okay, because that's the only way you can grow your money and beat inflation. Okay,
thank you, Carol.
Yeah.
So to summarize, it's very important in order to grow your personal wealth is to invest and perhaps set aside for banks. Right, thank you. Hi, Carol, once again. You have been answering questions about investing and trading. So what do you think is the role / purpose does investment and trading have in financial literacy, since FinLit consists of so many elements?
Okay, so what does financial literacy mean? Okay, you need to know about not only about finance, but also how to handle budgeting, how to handle your own, the way basically you handle your finances. That is actually in a nutshell what financial literacy is, right? Regards to the question that what do you invest in, for example, I fully agree. You're brand new in the market. For those who have never invested in all that, don't start with crypto, okay? Maybe now Bitcoin is 19,000. Maybe you want to put $2 there. Okay, fine. Okay, but don't spend a lot of money there because it's still not tested. For those of you who have not, it's too young for you all. Okay, but if you look at history, right? The tulip case, for example, everyone talked about tulips at the time. It was like forever going up. Suddenly it's crashed bottom. Crypto is not tested yet. You have many ups and downs in the marketplace. Equities market, stocks, ETFs, very tested because they're based on fundamentals, right? Apple, for example, I like to suggest that if you want to start something, apart from ETFs, buy something that you can feel, touch, know. You buy Starbucks, you go Apple, you buy McDonald's, all these are listed companies. You see DBS Bank, UOB, they're all listed here, right? So if you can touch, feel, know what it is, then you do a little bit of research. You don't read about what Tim writes and so on. And then you can, okay, fine, he's done it in very bite-sized in the Prosperous Club and all that. Very easy to read, trust me, I read it all day. So again, just buy something that you know, okay? And by doing that, by starting the process, you will become financially literate. A little bit every day, a little bit every week, a little bit every month. And that helps in the learning journey.
Thank you, Carol. Tim, would you like to
yeah, just
share
follow
as
up on
well?
Carol's point. I mean, no, I totally agree with Carol. And I spoke about some of this to you guys yesterday at the event. Crypto is a ridiculously young market, right? Think about Bitcoin. When did that sort of come into the public's, come to the public's awareness, right? Probably like 2007, 8, just after the financial crisis. So we're talking about technology and an asset class effectively now, which is maybe 15 years old. That's unprecedented short time to base investment decisions, on the data that asset class has produced. If you look at stocks, it goes back like 300-400 years, right? So with stocks, with bonds, these markets have withstood the test of time. They've gone through 2 world wars, they've gone through great financial crisis, they've gone through Asian financial crisis. So they've gone through so many crises over the years, and the chart for at least US stock markets is up and to the right. So I think the point is, crypto is really attractive proposition. I get it, but you've got to also weigh up the risks of it as an asset class and how young it is, versus the potential rewards over time versus stocks. I think, which is an established asset class.
Thank you, Tim.
Okay, so previously we talked about having an understanding of your risk preference and being familiar with the kind of companies you want to invest in. So I think the question that a lot of students have posted is that if they were to start investing or trading, is there a certain checklist of items that they have to research about? Because research is such a big word, but where exactly do they start with? If Ren, you could take the question first.
Okay, a rather tough question for me. Okay, I just base it on my personal experience again. All right, so most of you know that anybody from aerospace kind of like studies over here. Okay, so you know that I don't know if you know if when a pilot actually takes off, they have the rules or checklist to do, and clear. This clear, every clear. I'm not a pilot anyway, by the way. So they need to do a checklist. So a checklist for me is like, okay, so first you need to you ask yourself whether that system is a discretionary trading system or a non-discretionary trading system. So discretionary systems are like, I think our Bitcoin is at way low. I think I can buy. That's discretionary. But for non-discretionary, on the other hand, is you set a rule, you set a checklist for yourself. So Bitcoin is at low, but it's below the 252-day moving average, below the 200-day moving average. Volume is low, oscillator is not showing anything. No, don't buy. And then that's all the checklist. So my personal experience, I like to use a mixture of both. So I create rules for myself. I strictly follow the rules, and then I make my decision. 20%, remaining 20%, based on my own discretion. So, but there's a pitfall as well. I think we humans always fall for a lot of biases, psychological bias, availability bias, FOMO, fear of missing out, and say, I should have got it in. You see, Bitcoin grew by 200%. I should have got it in. And then next time you do it, and then you may or you may not get it. So remember, I think a checklist is very important. So also you need to ask yourself what kind of rules you want. There are thousands of indicators, technical indicators out there, right? I think from MACD until you can modify the MACD into different periods. You got Ichimoku. I think you got wave theory. You got Gann theory. You got many more theory that is out there in the market. So you got to find yourself that suits you. Create a checklist, and one thing, backtest it. Yeah.
Thank you, Aaron. And Shanisa, would you like to share your take on this?
Yeah.
Shanisa, team, yes.
Oh,
yeah, both of you could take the question after each other.
Sorry. Yeah, so I'm going to approach it, I guess, from the business side. So how many of you guys do a business major or business administration? Okay, so yeah, a fair number. Okay, so you guys, you know about, I guess, total addressable markets, which is like, a product, what is its total addressable market, and then market share. And for me, I kind of look at three things. So first off would be the total addressable market, right? Is this a company that has a pretty good leading market share in a massive market that they can address? Number two, what are their cash flows? So cash flows would be free cash flow and operating cash flow, because in this, I guess in investing, like cash flows are really king. And then third would be margins, right? So gross margins, which is the top line margin, and then from there operating margin and free cash flow margin, right? So I think from that perspective, looking at the business fundamentals, thinking about the growth trajectory, and some of these great companies, like an Apple or whatever, like a Home Depot, these guys have grown for like 20, 30 years at really, really great rates, right? And they're consistent. So I think there are great businesses out there, but you just have to identify them and just, hold on to them, because I think one of the things that Warren talked about was biases, right? I think selling out too early, I think, is one thing, or cutting your losses and then it recovers. I think there's always going to be human emotion. But I think for me as a long-term investor, one of the biggest mistakes, which I make, and I think everyone makes, is selling these winners way too early, right? You're rising, like these stocks are going up and you're like, I've made 50% or 100% over 2 or 3 years, or maybe over 2 years, over a short period of time. So I'm just going to sell it and I'm going to hold on to stocks that have not done very well. So it's more like a case of, watering the weeds and pulling out your flowers, as David Gardner likes to say, and the founder of the Motley Fool. It's more, thinking about businesses that you really like, you really think have a long runway for growth, that are consistent, that will consistently win. And don't interrupt that process. Like, don't sell that thing that's winning, right? Just let it be there. And if it continues to grow, that's great. Because the great thing about long-term compounding is you can always make more than 100%. You can go up, over 20 years, maybe you'll make 2,000 or 3,000%, who knows, right? But the most you'll lose from that investment is 100%. And if you're buying an Apple or a massive company, what's the likelihood that you'll lose 100% of that investment? Probably not very likely, right? So I think it's more about understanding your biases, trying to fight that. I know it's easy because we talk about, no, you shouldn't do this and you shouldn't do that. But then when it comes to it, it's scary, right? So it's more about having that discipline and not interrupting things that are doing well for you, because I think that's a key part of long-term success for investing.
Shanison has anything to add?
Yeah, I think Ting and William have covered pretty a lot of things actually on this area. For me, when you start doing this, right, I think it's quite important to have a challenge in terms of psychology. It's actually something very important. You might have some challenge in terms of what you want to do with this and how do you evaluate a company or all those. But if let's say in terms of psychology, right, if let's say you don't follow your trading plan or investing plans, these things might not work out well. So first start actually for myself is I want to differentiate, for this, am I actually looking for the long-term investing, or actually for the trading, which is come back to the previous questions. So for me, if let's say, I have a portfolio, which is, apart from ETF, I also pick some of those very good dividend stocks in Singapore, like banks, like Carol mentions, and some of the REITs also, which give out very good dividends, because essentially I want to build a portfolio for that. So for that, when I do this, I put a name for it, do not touch, so it's actually for my long-term one. While the other one is actually, in terms of trading. So this is first that I do, make sure that I know what am I going to do. And then after that, you move on to the trading plans or investing plans. And you have to actually write it down. For me, I maintain a journal, which is a trading journals, what is the things I want to do with these trading plans before actually I enter it. So a lot of people actually, when you look at the markets, right, when the share price is going up, all those, you feel very ganjong, oh man, if I'm not going to trade now, the share price is going to go up. And let's say you are late for a few seconds, right? Say, oh my gosh, I should do it just now. Now it's already up 5%, Otherwise, I can make 5% with this just a few minutes time. So don't be ganjong. The market is opening every day, right? You have a lot of opportunities out there. So right now, in terms of trading plans, what do you want to do? What is the reasons actually for that? Is it based on the fundamental or is it based on the trading? And if let's say based on trading, what is the entry price you are targeting for that? And what is the take profit? And what is the stop loss? And it's more than that also. If let's say you have a trading plans, how much money do you want to put into it? Let's say you are using some of those stocks or actually the future contract or CFD, whatever. How many contracts do you want to buy into it? Right? So you need to actually have this kind of plans in place. And after doing this, what if the share price go up to a certain price or go down to certain things? Then what are you going to do? So you have to be very clear in terms of your trading plans. And then you write it down. And then if you want to do something, you check this again before actually you do it. So that is one way actually to protect yourself also, before you gain more experience in the markets. Yeah.
Thank you, Shenison. Ms. Carol, would you like to share as well your inputs on this question?
I think enough sharing. Not enough time to answer all the questions.
All right, then, Carol, once again. Lastly, this question goes to you yet again.
Okay.
Some students have noticed that other companies usually have an investment challenge without any webinars or fireside chat like here today. So why is CGS-CIMB hosting such a holistic program? And what do you hope the students can gain from this fireside chat?
Yeah, I think like the very fact that audience here, majority of you actually don't know about investments shows that there's a need for it. And I think that to launch an investment challenge without knowing what to do with it, apart from going in and trade in and out and all that, I think it's not a holistic approach. So I think that's, like I said, it's very important to learn about risk management, how you diversify, what to buy and sell, trading strategies, for example. All this, it sounds complicated, but actually it's not so complicated once you get into it. Once you start doing, I think it gets a lot easier. And I think for us, like it's important that we send the right message. As financial firms, we all make money, right? Nothing to be guilty about. Financial firms do make money, and I think it's for us. It's also a duty of care for us that we give it back to the community. I think what worries me, honestly speaking, is a lot of investors right now, young investors like yourselves, for example, are really not getting it right in the sense that you're going in and investing because your friend said so to buy Luna and Terra and so on. And even the exchanges that you go into, your hot wallets and cold wallets, do you guys even know what's hot wallet and cold wallets? Do you know that the exchanges that you go in are not regulated? They can, that a lot of coins are being stolen and they close down, people run away with the money. I don't think, and maybe some of you are lucky, you're making money out of it, but it doesn't mean that it's business forever. So I think things like that is, the scams that's in the marketplace right now, it's so important to let all of you know that before you invest, make sure that you know what you're investing in, and trust is important. So this is a little bit selling on CGS-CIMB. We have 40 years in the market, 40 years. Do or die right here. There's somewhere they can knock on the door and come and say, hey, give me my money back. I lost money, etc., because you missold something to me. So you guys need to know that when you do want to invest, find a firm, not only about us, but find a firm that you can trust, that you can reach out to. You have problems and all that you can get through the line. Okay, very important. And when you invest in crypto, for example, please make sure that you find an exchange that's either regulated or has been, or that that it's pretty safe. There are safety measures put around it that people cannot run away with their money. So this is about financial literacy. You need to know what you're doing, and because of that, that's why I say that as young investors, I think that don't just plunge in. Do a little bit of homework. And to Tim's point, to my colleague's point as well. If you see Apple on the street, and in every other country, it won't fail. It won't fail. It's not something that's like they created a new coin, Dogecoin, that comes out of nowhere and so on, right? They create something new and suddenly it gets sexy. But things that you can see, feel, breathe every day is there. It's unlikely it will go bust. So please learn to diversify. And then I hope you get learnings through our webinars and so on.
Yeah,
Thank you,
I just
Carol.
wanted to add one more point. I mean, you guys are incredibly lucky and unlucky at the same time. I think you're incredibly lucky because at this point in time, investing has never been more accessible to everybody than it is today. I mean, you guys can buy things and sell things and it be super cheap. I mean, back in the day, it would cost like, I don't know, $40 or $50 to buy a share and sell a share. It was crazy, right? So I think nowadays you guys are lucky that you have such great options and a vast array of opportunities to invest. I guess unlucky in the sense that, inflation is at a 40-year high, right? So it's never been higher than it is today, which I guess relays back to the point, it's even more important to invest, like Carol said, because inflation is eating away at your savings. It's never been a more important, prerogative for you guys to invest than it is today. I mean, like 10 years ago when I was still like 12 years ago when I was starting to invest, inflation was benign. It was like 2-3% or like even less than 2%. And now it's getting up to 4, 5, and we don't know how long it will stay there. So it makes it even more imperative for you guys to invest, but it's also great that you have so many options today.
Thank you, Tim. So what I'm getting is really educating the next generation of young investors and as well as being aware of scams that are currently online. So guys, be sure not to trust your friends if they ask you to invest in any shady items. Right. So moving on to the next segment, we'll now be taking the top questions, which is found on our pigeonhole, and we'll be posing these questions to our panelists. So perhaps you want to take the first question?
Okay, so with 34 votes, that's quite a number. The top question we have is, what is the optimal portfolio volatility range for a portfolio with a Sharpe ratio of more than 1? It's quite a technical question. Any of the panelists can take it?
Experienced investor, yeah.
Any of the panelists?
Okay, so I mean, in terms of my portfolio, right, it's actually, as mentioned, I got two, right? One is actually in terms of trading. So in terms of trading, right, I mean, you might want to look at the drawdown also, which is something actually people don't look at that, so much. And what it means, right, is let's say you start with a $10,000 here. So the portfolio value might go up or down, right? So if let's say go up to a certain point, let's say it's $100,000, but at one point in time, because the trading doesn't work and that's a drawdown, it goes back to 40,000. So from 100,000 to 40,000, actually, effectively, you're losing 60,000. So it's from a peak to troughs over there. But after another, let's say half a year, it go back to $200,000. So if you look at this kind of trading and a portfolio, it looks great. From 10,000 all the way becomes 100,000, 200,000. But there's one thing actually missing is actually you are looking, you forget about the volatility, the drawdowns actually in terms of portfolio. So for example, let's say when the portfolio value drop from 100,000 all the way to let's say 50,000, it's actually 50% drop. And at that point in time, are you able to actually tahan this kind of volatility in terms of portfolio drawdown now? It's a 50%. You might start to losing faith in terms of what you are doing right now, right? But I mean, on hindsight, yes, it worked out very well. But at that point in time, even a strong, traders with strong hearts, right? You might start to doubt about that. You have taken some time actually for this to build up so much, but actually it's losing money. But whether actually in terms of this kind of volatility and drawdown, what percentage actually is suitable of that, right? It actually really depends on the person. Different investors have different kind of tolerance levels, right? At the beginnings, maybe you don't have that kind of tolerance level. Maybe 10-20% of drawdown actually it will actually make you very nervous on that, and you start doubting about the ways that you are trading in the markets. So, but if let's say you are backtesting the strategy, like William mentions, all those, right, and you believe in terms of what you are doing, and then you look at this kind of things, right, you have a faith in terms of what you are doing, right, then maybe you can take slightly higher in terms of that kind of volatility in the portfolio. So it really depends, in terms of your experience and the tolerance level personally. Yeah.
Okay, thanks, Vanessa, for sharing on that. Any of the panelists want to take it? We're good. Okay.
All right, so for the second question, as a student, if you do not have an emergency fund, since parents are your emergency fund, is it wise to start investing your money, such as your allowance or pay from part-time work? Does any of the panelists want to take this question?
A resounding yes. If your parents are behind you, all means going, you should invest your allowance. Because I think, like I said, you got to start somewhere. and your parents even bankroll even better, and you kind of like sit does look with this amount of money, what I'm going to do with it? Am I going to be a trader, investor? Am I going to do a hybrid approach? And then you decide basically out of this maybe $1,000 that you have, maybe you put $5 in crypto, and then you decide what ETFs you want to buy, what stocks you want to buy, what's trading, what's fundamental, what's longer term. That's my view on it.
Yeah, I mean, I would agree. I think like if you, you don't have any responsibilities and your parents are your main source of income, then you should be putting that away. Obviously, when you start working, then you should think about saving yourself and budgeting yourself. But if you have that income and you are allowed to by your parents do what you want with that money, then I think you can always apportion a little bit of it to investing and understanding how the markets work. And as Shanison had said, you don't really understand it fully until you start putting money to work and putting it into the market and getting that real life experience. So I think it's definitely a plus.
Thank you. Wayron, do you want to share?
Okay, I think just to round up our question from the Pigeonhole, I think this question is quite relatable. Where can we find the resources to educate ourselves as a first-time trader or investor? So where can we as youths go to look for such information?
My uncles now. I think there's a whole host of educational content out there, and actually there's some really good books as well as an investor, as someone who's starting out. I think if you think about just money and budgeting, as Carol touched upon, there's a really great book called The Psychology of Money by Morgan Housel. And it just talks about how we think about, either investing or money and what makes us happy. And so I think understanding your personality, understanding your approach to money, understanding how you handle it is really important. And obviously there are so many human biases in money and investing, in financial decisions that you make. So understanding those biases and coming to terms with them first, I think is a really important first step. So that's a great one for money management, The Psychology of Money. And then for investing, for me, Peter Lynch, there's Benjamin Graham, but he's, to be honest, pretty dull. But that's dry stuff. So I think if you're talking about interesting stuff in investing, I think Peter Lynch, One Up on Wall Street is a really great book. It was written, like 30, 40 years ago, but it's totally relevant to today as well. Just about business, about investing, about your biases, about never being able to buy at the bottom. You'll never buy at the bottom, you'll never sell at the top, right? So I think just get used to that fact, and no one can do it. No one can time markets. So a lot of these issues come into play in the book, and I think it's a really, really great read for anyone who's starting on their investing journey.
I think not all of you are like Tim, because Tim is like, he studied history and all that. So to simplify things for all of you, I'm going to talk shop here, like investing note here, we have Prosperous Club here. Tim actually has broken everything down into very bite-sized information. We've got about 1,000 subscribers on our Prosperous Club now. Please just go and read it. It's so simple to read. They even tell you, for example, what there's 5 simple things you need to do before you invest, right? They even tell you, for example, what's Apple about. Just in a paragraph, you know what the company does. So if you want to start somewhere simple, and not only us, I'm sure there are other platforms as well, but you don't have to go very far. For you to go and Google and search and all, and to read Peter Lynch, I think that not everyone like you, Tim, right? Yeah, but seriously speaking, and I have personally read through every single item that comes to the Prosperous platform, investing note as well. Please just go in. If you like it, you stay on it. You don't like it, you just don't read it. Yeah, but it's a simple way for you guys to start. And trust me, it's very simple. Republic Polytechnic has also done created a curriculum together with us. I've seen information that also bite-sized. It's on the website as well. So we're going to read something very simple. It's actually done by students for students, right? I mean, whereas you read books and all that, they're actually really for the very advanced. You need to know have some knowledge about investing before you read those great books that Tim talked about.
So I mean, just want to add on a bit. I mean, right now in this kind of internet era, so there's so many resources that you can learn online easily. Apart from the books, there's YouTube, everything. But I think it's actually a lot of people are lacking of the inspirations. How do you get people who are like-minded people who can inspire you to be a great investor and traders out there? So join the kind of communities, and having the kind of gatherings over here, I think really helps a lot, So start talking to friends and people over there. And yesterday during the events, actually, I get a lot of questions about, what books should I start reading, So I think you guys are really enjoy a lot of books. So a part of one of the books that, Tim mentioned also for that. in terms of trading, one of the books I actually recommend is also the Market Wizard, because it's not teaching you how actually, looking at the different kind of indicators, how to do it, but I share a lot of good stories about, so-called traders out there who are not known, that's called unknown market wizards out there. They can get inspired over there. So check it out, that can really help you guys a lot also.
Last final word on my talking shop, Mike. Simple thing, Prosperous Club, Mike. 5 top stocks to buy in September. So it's an easy start, right? And then it's done by, by analysts. They are all licensed by MAS. So you can just read it. It's so simple. Yeah. I won't talk shop anymore.
Thank you, panelists. So it's really about finding all these different abundance of resources online, especially by CGS CIBP as well as Republic Polytechnic, since all these resources are really curated for the young investors. So time really flies when having such a good time. So honestly, to end of this note, if you all are 20 years old again and starting on your financial literacy journey, what will you do differently? Perhaps we can keep this answer very shortly and we can start with Carol.
Actually, I take this last.
I think I will. I think I will just really go on investing and then put my money into, the stocks I want, because I started out with FX and futures, and it cost me quite a lot of. I got margin call basically, and owe quite money. So I think if I'm going to repeat, I think I'm going to first I'm going to read up and then start investing like exactly what Tim has said. Yeah.
Yeah, I think for me, my mistake when I was young, or what I would have done different rather, was invest outside of my home city or country. I'm from Hong Kong, so I was really familiar with the Hong Kong market. And obviously everyone here is from Singapore, so you guys will start out with Singapore, which is natural. But I think, not really expanding my horizons quickly enough beyond Hong Kong. Maybe it was really expensive back then as well, buying in the US or in Europe or anywhere else in Asia. But I think just learning about companies outside of Singapore, outside of Hong Kong, I think for me, that was something that I wish I had done more of, because I think, when I did start, I realized there are some really great stories out there. There's some really great stories that have really massive potential that are much larger than, the companies I was looking at in Hong Kong. So for me, it's more of, just be very open-minded, just like, be curious and just look at all the opportunities out there in the world.
First of all, I think you guys are very lucky because you guys start very early, For me, even at the age of 20, I don't even know what is finance, So I was just a nerdy guy, so keep studying and all those, So it's only when I graduated from the uni, I was thinking about what can I do, I was even thinking about, pursue a journey of being a trader, in the banks and all those. Why? It's because I heard a lot of good things about the traders making, huge amounts of money and all those. So it's driven by a lot of profits. So one of the big mistakes I made is actually, when I start doing investing and trading in the markets, I was too blindly focused on profit. So one of the questions I got during the event yesterday is one of the students that talked to me and say that, Shannon, for me, I just want to, put some money in the markets, and I just want to make a few $100s per month. How should I get started? So it reminds me, because I was actually too much focused on profit also. I want to make this amount of money, But the thing is, I forget how much money I have. So imagine I only have $1,000, but I want to make $500, a few $100s per month. $500 doesn't sound a lot, but based on $1,000 capital, that's a lot. That's 50% of the returns per month. If you compound it, based on month, that's how much profit you have. You're going to be the richest guy in the world soon, So that's something actually we never realize. But we only focus on, I want to make a big money. How should I do it? So it's something we should get rid of this mindset. Because of this mindset, I lose a lot of money at the beginning of trading in the first few years. So that's something actually I was hoping that I can get rid of that at the beginning. Yeah.
Thank you. I'm going to do things a bit differently now, because I think you can ask me privately later on. For the balance of the few minutes that we have, I'd like to actually open up my time to the floor, so you can ask me a direct question. Yeah, go ahead. Yeah.
Hi, I'm Daryl from Singapore Polytechnic. So good evening, panelists. So I'd like to ask on your investing philosophy. So congrats on your 40 years of having clients and investing for them. where is that sweet spot between risk and reward? Because like for someone like me, I'm young. I'm more willing to stomach risk. I'm more willing to, accept that I lost money, accept that whatever happened, right? But then for someone like you guys, institutional traders or people who manage other people's money, you have large AUMs behind you. You manage much tighter risk, and your personal investing philosophy might not match your team's personal investing philosophy. So where does that come into play?
I'll take the question. I think that at the end of the day, you plot your own individual journey. All of us here, you can hear from all of us. We have very, very different experiences, very, very different journeys. I think for yourself, if you say that actually that you prefer to take high risk, then go for it. Go for the growth stocks. You know your risk appetite, and then I would say then you probably go 80% equities and maybe 20% into fixed income and all the less risky stuff. But you're young and prepared to take the risk, then take a high risk profile. So you probably go more trading rather than longer. I suspect you're more trader rather than fundamentals. And I suspect most of you are actually. That's the reason why I said that it's not binary. But you would want also to see, for example, that you put some aside, those stocks that you really think are going to go long term, put a small amount there, and the rest you can trade in now as you like. And I think that for the young ones, like the thrill of it, right? And the reason why you buy cryptocurrency, because it's very simple. You don't have to think about margins, you don't have to think about what this company does. You just buy Ethereum, Ether, and so on, goes up and down, then you guys are happy, right? But if you have a high risk profile, what you also have to worry about is the fact that you can actually go to zero because the exchange can go belly up, as has happened, right? So I would suggest to you, in your situation, try some diversification. You can still go for risky assets, but diversify. Don't just buy all Ethereum, all Luna, or all cryptocurrency. Start doing other things. Start investing in equities and so on. Yeah.
But when you say diversify, what is enough? Because okay, so for me, right, I diversified all across. I had stock, I had crypto, I had whatever, right? But the whole market came crashing down. We're in a bear market now.
Yes.
Am I diversified enough, or should I have kept cash? Is cash key?
That's quite true, and I give you a personal experience as well. And this is a real life experience that I would like to share you all. Right, I took the decision not too long ago. I sold everything in the market. Okay, because I just did it maybe 2 weeks ago, and it's a personal journey because I feel that that the things are going to get very hairy going down the road. So cutting losses is very important, guys. You must also need to know when to cut losses. Because you hold on to something that's $60,000 at Bitcoin. Do you think it's going to go up there in the next 3-6 months? You don't know, right? Yeah. But again, if you feel that you're too much into that, then you may want to make a decision, right? Very difficult to say, honestly speaking, whether you're right or wrong. So it's a decision that you make, and you make that decision, then you decide at what point you go back in again. In your case, for example, I think most of you may be fully invested in the market right now. Okay. And in that situation, you're in a very difficult position, honestly speaking. Let's say you have a limited pool of money, right? Mommy, daddy won't back you anymore, and you got a limited pool of money. Then what do? So my suggestion in your case would be that you may want to cut some losses, things that you think there's no hope of going up, and then use that, reinvest back, and try to make it way back up. That's my simple suggestion.
Thank you. Okay. So in order to summarize, it's really about knowing yourself and knowing whether you will be able to cut your loss, as well as not being blinded by greed.
Yeah.
Yeah, so once again, thank you very much for the panelists for sharing your different experiences, your insights, and your takeaways from your own life experience. So once again, want to thank our participants here as well for being so participative, putting up your questions and asking questions. Okay, so we hope that tonight you walk away with at least 1 or 2 new learning points on financial literacy. So we would like to thank our dear panelists for taking your time out today to be here with us. Thank you.
By the way, there's some snacks there. I just want to assure you the snack box are the same as that. It's different food. It's not from leftovers from yesterday. It's brand new. Okay, some of us will still be around. I'm sure that you all got some own personal questions to ask, like Daryl here. I think we're more than happy to just spend a few minutes with each and every one of you to see what other advice you need from us. Okay.
All right. Thank you, Mabel and Samuel. And thank you to all our panelists today, Ms. Carol Fong, Mr. Shenison Lin, Mr. Timothy Phillips, and Mr. Chua Wei Ren. We have come to the end of our session, and I'm sure from the various sharings today, Many would feel motivated to get started on your investing journey if you have not already. Continue to enrich yourself through reading and research. And for those who have signed up for the investment challenge, stay tuned to the Telegram channel for more updates on the next webinar or Fireside chat session. There are some light refreshments prepared for your enjoyment, so feel free to grab a bite and network with various ones here. Thank you all and have a good evening.
Thank you. Thank you very much again for coming down. Hope you enjoyed it. Thank you. Yeah, yeah. We'll just mingle around. Yeah, thanks very much for that. Thank you very much. Thank you. You guys did a good job. Yeah. You look at the investments and see you really summarize. Sorry, I just tried. Okay, right. Yeah. Okay. I hope you enjoyed it. Yeah. Alvin, yeah, nice to meet you again. Yeah. Oh, sorry. I forgot. I'll be speaking with again.